We've been the first to admit that we're a bit too soon to the market with those projects, and particularly in the US, where we are still holding that project based on the economic situation in the country on the day. And our investment pipeline is strong, but we will not execute those deals where it doesn't make economic sense to do so. Well, we see structural changes to the steel mill profile in China happen all the time. So for us, we are not that concerned about some of the more recent supply side reform announcements. The conversations that we're having with our steel mills is very, very positive, and it really bodes well for the products that we have. We have a product strategy that accounts for all parts of the steel mill cycle, from low, mid, and now with high grade at Ironbridge. Our products move very liquidity and we have a very liquid base through our ports. So we really don't see any reasons for concern in the mid to even long term.
Weaker iron ore prices and stalled energy projects have seen Fortescue's profits slump. Has it been a tough year to try to lead the push into green metals?
Yeah, look, I think I acknowledge that our earnings have taken a bit of a hit based on that cyclic nature of iron ore pricing. You know, $120 that we saw last year was an exceptional price. $100 is a great price. We have healthy margins at that price. In regards to the announcements we've made on Gladstone and the US hydrogen project, we've been the first to admit that we're a bit too soon to the market with those projects, and particularly in the US, where we are still holding that project based on the economic situation in the country on the day. And our investment pipeline is strong, but we will not execute those deals where it doesn't make economic sense to do so. Hence the announcements that we made on Gladstone and in Arizona.
You say Fortescue is a bit early. How much of a setback is it to Fortescue's overall decarbonisation?
Look, it's not really much of a setback at all, and if I can take a bit of time to explain how we see decarbonisation and the energy market evolving around the world. A few years ago, we did put our money on a bunch of different technologies, one being hydrogen, one being electron generation, solar, wind, decarbonisation. And what we've seen in the market is a desire to get the cost of electricity down, so the green electron. Now, the green electron is really critical for us because that then creates that next stage of economic investment into things like hydrogen, liquid ammonia, fertilisers, etc. However, for our decarbonisation efforts here in the Pilbara, where we have a real zero target for our terrestrial operations, we are electrifying at pace. We have solar, we have wind, we have distribution networks, and soon over the next couple of years we'll be taking delivery of an entirely new battery electric fleet, which we will turn on and see the benefits of getting off diesel, and that for us is about 700 million litres a year.
The company, though, still talking up green hydrogen, wants to bring it on at scale in the future. What and when will it happen, and what will it depend upon?
Yeah, so at the end of this year we will have construction of Australia's very first large-scale green iron plant, and that will use hydrogen with iron ore, and we will have a combustion system that will reduce that to a green metal ready for export. And we're very, very encouraged by that, and that will really start the what we call priming the pump for hydrogen demand into the future on steel making. We're watching closely the upcoming IMO vote around the inclusion of ammonia as a fuel, which is a derivative of hydrogen. So we are very, very much encouraged by what we see in the midterm now around hydrogen as a viable use of fuels and also its chemical properties in the making of steel.
That is a pilot project, though. What will it take for Australia to become a low-cost producer of green metals at scale? And is it going to take a lot more investment from taxpayers?
Look, it's a great question, and again, it's anchored into that green electron. what's really encouraging for us and Fortescue is the cost of solar and wind, and now coming down at a rapid rate of not is the cost of battery storage, which batteries, when in combination with solar and wind, you get that 24/7 green electron supply. You can do a lot with that green electron. You can put it into your grid, get our cost of electricity for mums and dads down, we can get our costs of our industrial plants down, but also you can then turn that into other green fuels like hydrogen and ammonia that I've mentioned. What we're using it for is to turn it into a hydrogen at the source with the iron ore, and that's really important because you don't have to transfer and transport that hydrogen around the world. You use it where you generate, which reduces the capital intensity. But really the message I'm trying to get out there is we all need to, industry, governments and society need to take the opportunity that's right in front of us, and that is harnessing what the world needs. Is the world wants greener commodities. It can only do so by getting the cost of electricity down, and we see that potential, particularly in the Pilbara, where we have some of the highest sun and wind intensities on the planet. So it makes the potential great. We now need real bold leadership in terms of industry, like what we're doing, and also governments to step in to create that common user infrastructure that we can all benefit from.
Are investors right to question whether Fortescue's bet on renewables is just too big, given that the other big iron ore miners here have diversified commodity portfolios?
Yeah, look, it's a great question, and we have a diversified book as well. We have a very healthy exploration pipeline. We have a couple copper projects that are really, really interesting. You know, they're multi-year exploration programs, which gives us exposure to a copper portfolio. In our Gabon project in Africa, we have exposure to a very, very high-grade iron ore product. To talk about what gets most publicised, though, is around our green energy ventures. And again, the cost of the generation of that electrons are coming down so rapidly now that it really is in arm's length now that we can create that green power source to fund not only our industrial investments, but really support the country as a whole to drive that cost of power down and spur downstream investments in manufacturing, beneficiation, that downstream industry that we've always wanted to have here in Australia.
Some of the bosses of other big Australian companies have used results season to take a swing at the government for not having an attractive enough environment to invest. Do you share their concern?
Look, what I'd say on that point is I'm really encouraged by what the Prime Minister, Anthony Albanese, here in West Australia, our Premier Roger Cook, is doing in this space. They're listening to industry like ours. A recent example of that would be the new EPBC Act reforms, where industry would largely have advocated there's a lot of red tape in that process. What we're finding now with Minister Watt is a much more consultative, very open perspective on listening to feedback, protecting the environment and ensuring that we have economic development in the right way. And that's certainly the area that Fortescue plays into. We stand by our credentials on protecting the environment and sustainability through what we're doing with climate change and economic development. And I think you can do both of them. But it does rely on the government to have a look at some of the restrictive nature of what I would say in conflict areas of policy. But what I am seeing is a much more open dialogue now to make sure that we keep our eye on the main game here, which is economic development in a sustainable way.
Okay, just quickly, what would you like to see the government do?
Well, I think more of the same. I think what was really encouraging was the Prime Minister's visit, for instance, to China, where we got proponents in a very critical industry, which is iron ore, around the table for the first time, demonstrating to our customers that it's a critical industry. And then closer to home, the government is now being open and topics around tax reform and environmental legislation reform and approvals reform. And at a state level, we're seeing it certainly being fast-tracked. And I would have stood here 12 months ago and mentioned about the exhaustive approvals timelines it takes to bring new projects on. We have been at the benefit of receiving some of those approvals now in a much, much quicker, more globally accepted way to develop those projects. And that's really important for investors like us who want to deploy capital in the right timeframes and work with governments and communities to make those projects a reality.
Dino Otranto, thank you.
Thank you very much.